Well, hello guys, it's Sam here on the Mavin Prop Trading YouTube channel. Now, in today's video, we are going to be talking about 3 telltale signs that you are ready to go for funding. Now, let's just get rid of the elephant in the room. I can already hear you judging me for my pink shirt. You're saying, Sam, as a guy, that's a bit of a brave wardrobe choice. And I agree, but I'm a brave guy. And what I would say is not all heroes wear capes. Some wear pink shirts. So if we can get over that little hurdle, let's get into the video. So first of all, why do you need these 3 telltale signs that you're ready to go for funding? I think we all know that many traders try and go for funding before they're actually capable of passing the challenge or managing the funded account. But on the other side, which doesn't often get spoken about, there are probably many traders who hesitate to go for funding when in reality they're actually ready. They are actually well equipped to be funded and to manage a funded account, but for some reason, some limiting beliefs or other factors keep them from committing to get funded. They say, I just don't know if I'm ready yet. I don't want to take the challenge in case I fail. But in reality, they are more than capable of going for that funding challenge. So let's look at 3 telltale signs. If I see these 3 telltale signs in a trader, I know that that trader is ready to go for funding. I've been mentoring and teaching traders in universities, trading floors, financial expos for years. Taught thousands of traders, produced countless professional funded full-time traders. So I know exactly what I'm looking for in a trader to say whether they're ready for funding or not. Now, the first telltale sign is that the trader has been trading consistently for 3 to 6 months on real money. Now, I'll explain why in just a moment. So I'm not looking for they've made 1000% or they've made money every single month. But if a trader has managed to execute their strategy consistently over a 3 to 6 month period on real money, I think that person's in a very good state of mind. They're showing discipline, they're showing an understanding of their strategy, and they're showing that their strategy isn't just theory. They're actually able to put it into practice and apply it within the markets. Now, why live and not demo? Maybe you don't have a ton of disposable income to chuck at a live account, but what I would say to you is that $100 or even $200 in a trading account of real money is worth more for your trading experience than trading a $40 million demo account. If you trade some demo account, some massive size, and you lose 50% of the account, you have no emotional attachment to that money. It means nothing to you at the end of the day. It's very hard to take it seriously and to trade it seriously. However, when you're trading live money, even if it only be a couple of $100 or a couple £100, because it's real money and you're actually experiencing financial loss, you are going to develop your mindset and your discipline much better. So if I can see a trader has traded live on even just a few £100 for a number of months and they've managed to trade consistently and with discipline, that's a great sign for me. Now, of course, wrapped into this, when I'm talking about trading consistently, I'm talking about applying good risk management, and I'm talking about applying a proven strategy that's able to make money within the markets. Even if it's not been hugely profitable over the period that they've traded it, if they've traded it consistently over 3 to 6 months, it's a big green tick for me. Telltale sign number 2 is that you are not making frequent mistakes in your trading. What do I mean by frequent mistakes? Well, mistakes could be forgetting to place a stop loss, accidentally risking too much on a trade. So you're meant to risk 1%, but you accidentally risk 5 or 6 or 10%. Placing trades directly into high impact news without realizing, taking trades that were not in your trading plan, copying or following someone else's trades, whether that be a friend or someone on Twitter, just having that uncontrollable urge to go and follow them into a trade. Over trading, taking more trades than you should be, exiting trades that you should be staying in because you're afraid of losing some of the profits or because you're afraid of losing more than the current drawdown, or staying in trades that you should have already exited. So you've seen an exit signal, but you're just wanting to stay in it, hoping that it will turn around. All of these things are mistakes. Now, this isn't a comprehensive list. There's hundreds of mistakes you could make in your trading. And me, as a professional trader, I will still make mistakes every so often. But what I would say to you is, for me personally, I maybe make 1 or 2 mistakes for every 100 trades that I take. Now, in a year, I will take 150 to 200 trades. So over the course of a 12-month trading period, you're maybe talking about 2 or 3 mistakes I will make throughout that period in my trading. But again, I'm a professional. I would allow yourselves a little bit more breathing room than that. If you can go a 3 to 6 month period in the markets, making less than 1 mistake every month, I'd say that's a pretty good sign. If you're making serious mistakes every week, like forgetting to place stops, trading into high impact news that you weren't aware of, applying too much risk to a trade, trading instruments or strategies strategies that are not in your trading plan, I would say you're probably not ready just yet. Focus on getting disciplined and really locking down some of those basic trading disciplines before you go for funding. Because ultimately, even if you do pass that funding challenge, when you've got that funded account, these little mistakes could cost you the entire account. It'd be better to just wait until you're a bit more disciplined and you've got things under wraps a little bit better, and then keep the funded account for a long time than to pass it just now and lose it, you know, in a month's time or a couple of months' time. That could be seriously detrimental to your mindset and to your motivation. Now, telltale sign number 3 is going to be perhaps a controversial one, is that you have enough money to try again. Now, if you're going for a funding challenge and the funding challenge costs $500, you should have at least 5 times that in your bank account at the moment. Now, 5 times that is super small. That's at minimum. If you've got 2.5k in your savings, spending $500 on a funding challenge, I personally do not think is a wise investment if you've not got many multiples of that in your bank account already, in your savings account. You should not be spending the last of your money on a funded account. Absolutely not. That's just total gambling. That's totally irresponsible. I'm not here to give you financial advice, but anything you buy, whether it be a pair of trainers or a funded account or a computer for work or whatever it is, it needs to make financial sense for you. Do not look at the funded account and say, okay, well, if I pay a few £100, I'll have $200,000, therefore it's a wise investment. You need to first weigh up, are you using money that you're going to need for food or rent or travel or anything like that? Don't spend the last of your money on a funded challenge. You know, that's a recipe for disaster. Make sure you have the affordability to reset the challenge multiple times. Why? Even the best strategies go through periods of drawdown. I am personally a mechanical trader. Everything I trade is mechanical and data driven. So that means my strategies are very black and white. I don't implement a lot of discretion or market read. I simply trade the signals as they appear on my charts. Now, because of that, my strike rate is pretty low, but the strategy is very consistent. So this means in a year, I could have 6 months of the year spread out that don't make money or are break even, and the other 6 months of the year are profitable. So you may have winning month, break even, loss, win, loss, break even, etc., etc. And at the end of the year, I'll be up, but I could have 2 or 3 month periods throughout the year where I don't make any money or even lose a little bit of money. Now, if I set a funding challenge within that 3 month period, it's very likely that I'll lose it. So I want to come back the next month and set another funding challenge. Okay, maybe I lose that one, come back the next month, set another one, and that's the one that I pass. That's just the nature of the markets. You can't predict when you're going to have losing streaks. So always be prepared to set multiple funding challenges back to back to increase your probability of passing. So make sure you have the money to be able to do that. There's no point in doing it, as I say, with the last of the money you have available. That's super unwise, and it's just a recipe for disaster. Now, with all that being said, guys, the best of luck to all of you traders who are looking to get funded. Make sure to follow these 3 telltale signs, and if you can safely tick off each and every single one of them, I think you're in a good position to go ahead and get funded. As always, thank you for watching. Please do drop this video a like and consider subscribing if you haven't already, and I'll catch you guys in the next one.